Welcome back to the GMS Weekly Ship Recycling Market Insight Podcast, your short take on the world's largest cash buyer's view of recycling markets. It's week 1 of 2026. I'm Ingrid.
And I'm Henning. Happy New Year. Although the market didn't exactly ease into it.
Not even close. The year opened with a geopolitical jolt.
The big shocker, the U.S. seizure of Venezuela's President Nicolas Maduro and his wife in a pre-dawn raid. Whatever your politics, the shipping takeaway is simple. Uncertainty over control in an oil-producing country tends to ripple into sentiment fast.
Especially when the rest of the macro picture is already messy. U.S. stocks sliding into year-end, China's industrial growth slowing, and Europe showing strength. It's mixed signals everywhere.
And those signals matter in our space because when shipping markets get even a whiff of support, owners delay recycling.
Which brings us to the usual trio we watch: freight, oil, and currencies.
Freight gave owners something to smile about. The Baltic indices showed signs of a resurgence.
Oil is still drifting toward that $60 conversation, but it actually ticked up on the week and closed around 57.
And the US dollar started the year a bit off balance against ship recycling currencies. Not a full reset, but enough movement to keep buyers cautious.
Add in steady steel plate trends, nothing dramatic beyond the recent direction, and you get a market that's trying to find its footing, while political risk is doing everything it can to kick the stool out from under it.
And that political risk is most visible right now in Bangladesh.
Yes, Bangladesh is the story this week. And not in a good way. Since that tonnage engorgement back in November, Chattogram has been in a consistent nosedive.
Levels are down about $50 a light displacement ton from the highs of Q4. That's a sharp fall in a short window.
And the result is what you'd expect. Demand softens, offers struggle to compete, and the whole market feels like it's gone to voicemail.
The domestic backdrop isn't helping. February elections are approaching, and we've had rising unrest, protests, rioting, and violence, which makes recyclers understandably hesitant.
On fundamentals, local steel did its usual weekly volatility, and the taka softened a touch again, ending around 122.30 to the dollar.
But here's the twist. Even with weak sentiment, Bangladesh was the only subcontinent destination that actually reported arrivals this week.
That's true. Including the first prompt delivery of the year, Chattogram's port position showed a general cargo unit, a large LNG or gas carrier, a small tanker delivered under tow, and a bulk carrier. Roughly 39,500 tons all in.
So the waterfront had action, but the bidding table didn't have confidence. And if that gap persists, you can absolutely see tonnage start looking west, away from Bangladesh, until stability and pricing return.
Which brings us to India, because India had the momentum this week.
Big move. India surged by nearly $30 a ton week on week, pushing Alang back to the top of the subcontinent rankings for the first time in over a quarter.
And that's despite the rupee weakening again, back into the 90 per dollar territory, closing around 90.28.
The other standout detail, Alang anchorage looked like a deserted theater, empty for the first time in a long time.
With the usual caveat, there are units sitting outside waiting to be reflected on port reports. So it's not that the coast is suddenly irrelevant, but it's still an eye-catching signal.
The broader strategic point is this. Since June 26 last year, every recycling decision is effectively an HKC decision. The convention is in force. And when Bangladesh is overstuffed and short on available compliance slots, and when owners and cash buyers don't feel like doing the DASR dance, India becomes the simplest execution.
So, yes, India looks best placed right now to absorb near-term tonnage, at least until Bangladesh gets through elections and settles down.
Pakistan is the market everyone keeps watching for the step into the breach moment.
The report calls it Hot Wheels. Pakistan is right behind India. And with Bangladesh taking a breather, this should be the window for Gadani to get opportunistic.
But will they? Local offers are still mostly below 400, and it's been an inert end to December and start to January.
And the anchorage tells the story, empty, again. It really is an eclipse moment when regional anchorages west of Chattogram are sitting totally bare.
On the fundamentals, steel plate prices were steady and the rupee softened just a touch, ending around 280.62.
And there was one genuinely positive domestic note. Inflation reportedly dropped to 5.6%, the lowest since August 2025.
Operationally, though, the HKC bottleneck remains. 1 yard is approved and more are upgrading, but Until there's meaningful compliant capacity, Pakistan's beachfront stays ready to acquire in theory, and frustrated in practice.
And finally, Turkey.
Turkey is still on an extended holiday. No reported market sales. Aliaga is basically watching the world go by.
The lira slipped again, landing firmly in the 43 territory, closing around 43.03. And that's about all the news there is.
So when we stack the week up, the rankings make perfect sense.
India is number 1, firming, around 410 on dry, 430 on tankers, 440 on containers.
Pakistan is number 2, steady, around 390, 410, 420.
Bangladesh is number 3, or weak, around 380, 400, 410.
And Turkey stays number 4, steady but quiet, around 270, 280, 290.
The bigger takeaway for week 1 is that 2026 is already threatening to inherit 2025's volatility. Geopolitics is loud, freight is teasing strength, and that combination can keep recycling supply tight for longer than buyers would like.
Which means the short-term game is still about positioning. Who has compliant capacity, who has currency and steel stability, and who can actually execute clean deliveries without delays.
And right now, that points to India as the best-placed destination. With Pakistan waiting for its moment, Bangladesh in a politically heavy patch, and Turkey still sidelined.
That's it for this week's GMS Weekly Ship Recycling Market Insight.
For the full written report with tables and port positions, download it directly from the GMS app or subscribe to our newsletter to get it delivered to your inbox every week.
Until next time, stay sharp, stay safe.
And stay anchored with GMS, the world's largest buyer of ships and offshore assets for recycling.